All right, for this last video, we want to look at the sample K1 for a non-resident partner and the K3 attached to it. So we're looking at Ben Church's K1 here. So fake investment fund 2021 K1. There we have Ben's information. He does not have a U.S. tax ID number, so Foreign U.S. is the placeholder. And he is a foreign partner, right? So limited partner and a foreign partner treated as a passive individual investor in this fund. So there's his capital contribution for the year, right? $750K went in, $76,083 in net income allocated to him. Then his withdrawals is $76,18, and his net ending capital account $818,471. So those numbers, if we look at Ben's line item here, right? So there's his capital contribution. So all these numbers reconcile with what we have on his K1s, right? His net book income allocation, the distributions, and his ending capital. Now, remember, Ben is a German resident, and he is requesting relief under the German tax treaty to only be subject to a 15% withholding tax on dividends rather than the base rate of 30, or the statutory rate of 30, we should say. So that's important, right? Because Ben, when we look at his allocation of U.S. dividends, he only wants to be paying withholding tax on the U.S. dividend amount, right? Not the U.S. dividends and the foreign dividends or the interest income, right? Because that's exempt portfolio income. So we have to be very precise here about when we look at the dividend income, what's U.S., what's foreign, and what's ultimately going to be subject to U.S. withholding taxes here. So when we look at Ben's K1, again, what we see here is an aggregate. We see the aggregate of the U.S. and the foreign piece. We only get to see the details once we look at the Schedule K3 underneath, right? So we have his interest, his dividend income, his allocation, his short-term capital gains, and then his distributions there. And then line 21 is the foreign tax credits being funneled through from the Swiss withholding. So if we jump down to K3, let's start with the part 2 here under the foreign tax credit limitation amounts. So again, we can see here we're separating, and again, all of these amounts are flowing through from K2. So K2 is the totals, and then K3 shows your allocation, on the way down. So we can see the interest income, the dividend income, and when we look at sourcing of dividends, right, there's his U.S. source non-qualified ordinary dividend, and there's his U.S. source qualified dividend income. That's the piece that's being subjected to the withholding, okay? So that's where John can look at this and Benjamin, he can look at this and he can figure out, okay, what's my U.S. source versus foreign source income? So the best place let me look at part 10. That'll be easier, as that does a better job at kind of separating these for us. So part 10 again here, this is the foreign partner's character and source of income. So this is a good layout of the different types of income by source and how John can gauge what's going to be subject to withholding taxes. So when John looks at this, he sees, okay, here's the total, here's the partner determination. So there's no taxes on these items here. And then there's no U.S. source ECI. So I'm not paying taxes on U.S. source trade or business income being allocated to me. The taxes I need to worry about are in these sections here, the non-ECI. So U.S. source FDAP income, the 18,987, that's his allocation of U.S. source dividends. And so remember, he's paying the 15% withholding rate. So that's the $2,848 that's being taken out of his distributions to be paid to the IRS as his withholding tax. Now, remember the U.S. source other amount, this is the U.S. source interest income that's not subject to withholding tax. So that's why Ben gets a little break there. He doesn't have any U.S. source withholding taxes, but this is still reported on a 1042. So 1042S, we still report the U.S. source dividends, the withholding. We report the interest, but no withholding. And then the foreign source amounts here, this is, of course, what comes from Switzerland, right? So Switzerland did not subject the interest to withholding tax, but it did the dividends. So the 4833, that was subjected to a dividend withholding tax, and then that was being allocated over to Ben. So the $4,833 of dividends, if I recall correctly, I think the withholding tax rate for Switzerland was 15%, right? So 15% the dividends here, 48.33. If we do some quick math, just to make sure these numbers make sense, 15%. So we should expect Ben to see an allocation of about $725 in foreign tax credit. So if we jump up to his K-1, we can see here, yep, there it is, $725 in foreign taxes being allocated to him. And then that amount should also be down here in the foreign tax credit limitation section. Let's see, part 3, section 4, right? So Switzerland withholding being allocated to Ben in the passive category income. There it is, $725 of foreign income tax withheld on that passive category income. All right, so that goes pretty quick for Schedule 3. So Schedule K3 rather. Again, you're thinking of this as this is an allocation of the information that's reported on K2. But really look at the numbers, try to understand them, because you should be able to see the relationship between what's being reported here on K3 for each partner, and then ultimately what you would see in total up here on the face on K1. Okay. Okay, so that covers it for this video. Thank you again for watching. I really appreciate it. If you have any questions, please feel free to leave a comment below. Happy to answer any questions I can, and I look forward to seeing you again on the next series of videos. Thanks.